And welcome to Recovery Report Live. I'm Dan Odess, here with you to give you some advice as it relates to insurance and business. We are in an interesting time here in Florida. The legislator, obviously in the last few years, has passed some overwhelming legislation that has certainly assisted the insurance industry, the companies particularly, not so much the consumers. Now, I have been talking about this for good over probably a year. Matt and others have joined in on the conversation here on the Recovery Report Live to constantly give you information you can use. And that's what this broadcast was always about. When I started it back in 2020, 2019, it was always about giving you information you can use. And that hasn't changed. And particularly in today's environment, when insurance industries have gotten their way in a very tough market here in Florida, utilizing what has been found by many to be incorrect and baseless. Baseless legislation that has led to, quite frankly, a terrible consumer market here in Florida. And while Florida is considered a bellwether state, I'm confident that many other states have not adopted these things and that other states will realize the mistakes that have been made here in the state of Florida as it relates to this legislation. That is my opinion on this matter, but I constantly am continually being proven right. And the reality is that when this report just recently came out, a report that we've long waited for, a report that was owed to us prior to all of this anti-consumer legislation, the passing of legislation that restricted our rights to the courts, representation. It made it very difficult for public adjusters and attorneys and advocates to work on behalf of policyholders to ensure that their rights are protected. And as it relates to property insurance, we've seen an amazing amount of denials and underpaid and delayed claims, completely baseless denials, completely baseless delays. We have a number of files at GlobalPro that are constantly being plagued by delays and incorrect denials or wrongly placed denials. And for one instance, and I'll give you an example, Hurricane Ian claim on the West Coast, we're recently dealing with and digging through multi-million-dollar loss for a community association that was wrongfully denied for wind-created openings. Now, the insurance company's own engineer acknowledges that the conditions during Hurricane Ian were sufficient in order to cause distress and damage to the building's exterior apparatus, including windows, roofs, cladding, etc. But then finds, though, that it's only wind-driven rain that is inside the properties and therefore concludes that there is no damage at the property. Now, I don't quite understand how you can reconcile the opinion that the conditions at the property, based on his research, were in fact actually met or exceeded the standards of these building materials and therefore could have caused damage, but somehow jumped to a conclusion that it's wind-driven rain. Now, maybe he's not actually saying the wrong thing, and in his mind, this wind-driven rain is the hurricane damage. Well, because once upon a time, wind-driven rain in a hurricane was hurricane damage. And then what we saw after Hurricane Irma is the insurance companies slide in anti-consumer policy conditions that interpreted or redefined wind-driven rain as something other than hurricane damage when there was a hurricane. Was that to your benefit? Did your policy premiums go down? Did you receive broader coverages? No, your policy premiums went up, your policy coverages went down. They've manipulated the language, wind-driven rain, something that maybe someone would typically say as a lay person to describe wind during a hurricane and rain getting in the interior of the building, causing damage. And in this instance, it would seem that I could easily connect the dots between the obvious admission that the hurricane's conditions were at or exceeding the requirements of these building materials and therefore could cause damage, and that the water that was in the interior of the building that damaged interior finishes as well as drywall, building the association property, was in fact all hurricane damage. So we now need to go back, hire engineers, do reports, spend tens of thousands of dollars on behalf of the association to get reports to contest the conclusions of the insurance company. Because again, the insurance company is taking the conclusions of its engineer, which may or may not have been done in a harmful or innocent way. That's yet to be seen. We'll see, I guess, if this does go to litigation and that engineer gets deposed, where this all goes. But you see how these things can take how words can take on different meanings and taken out of their proper context and lead to different conclusions that may obviously benefit either the insurance company or the insured, in this case, the insurer, right? So they don't have to pay a claim. Well, something similar happened with the information that was in recent published reports. Reports, like I said, were long awaited for, that we believed as consumers, or the legislator believed, would be published and given to the public prior to, I believe it's last 2, maybe 3 legislation sessions where sweeping anti-consumer legislation was passed, of this belief that litigation that I just spoke about, where this claim may be headed to, right? Litigation was the cause of the insolvency of insurance companies and a let's call it an unfriendly market for the industry, the insurance companies to sell, and that's why they were leaving. Well, interestingly enough, and before I get to the report and the several points that were made in it, is that when you research the insolvency of insurance companies and you look to the reports that were drafted and written, published by the auditors, what has been found in those reports is that they also don't point to litigation and public adjusters as the cause of the insolvency. Interestingly enough, right? So in those instances, they had the choice to state that in plain English. And given the overwhelming lobbying efforts of the insurance companies and the numerous articles written in favor of the insurance industry, supporting or leading to this legislation, this campaign, this political, let's call it a political campaign that was run by the insurance companies to push their agenda on anti-consumer legislation, you would think that auditors in Florida reviewing the insolvency of insurance companies could have just so plainly written how it was litigation or public adjusters and their marketing efforts and all this other stuff. It was leading or causing increased amount of claims. It was causing increased cost of the claims. It was these legal expenses. It's not plainly written that way, and you have these pundits, if you will, by the insurance industry taking the words from these reports and then trying to manipulate them to mean something other than what they plainly look like on the page, right, or in these documents. And again, it's not plainly written that way, and they so could have done it. And with all of the marketing and press around the agenda of these insurance companies, you would assume that in these reports it would explicitly state this, and it's not. It's just not there. It's certainly not there overwhelmingly, and there's mention of claims, obviously, because those are the losses of the insurance company. But you don't see them specifically pointing to litigation or public adjusters, these predatory tactics, as it was once described as by the state of Florida CFO, the locusts after Hurricane Ian that were going to descend on the area and cause all of these issues for consumers. It's not playing out that way, right? So you don't have it so plainly written in the insolvency reports, and then boom, we finally get some data. Now I say some data, why? Because these insurance companies, most of them continue to hide the ball and not publish their reports. In fact, there's over $30,000 of fines. Now, it may sound like a lot of money to some, but $30,000 to multi-billion, if not a trillion-dollar industry, I mean, what is that? Honestly, it's almost like it's like a joke. But whatever. It for us, what it does is it highlights the reluctancy of these insurance companies to publish any sort of data or information that supports this assertion, their assertions for several years now that has led to sweeping anti-consumer legislation, that in fact lawyers and attorneys and their tactics and their practices are in fact the thing that is causing insolvencies, is causing a loss of profit, or in making this market more difficult, and why insurance companies are exiting it. It's just not there. It isn't. Okay? And what the reports say, and I'm gonna read some from notes because I want to make sure that we understand this, is 5 things. Okay, number 1, inflation impacting rates. Now, interestingly enough, Property Casualty 360 just published another report They just published another report and another article just 2 days ago that further supports economic impacts and changes in the political economic environment as the driving force behind most of the issues in the insurance industry, widespread. Now, and it talks broadly about insurance, and it goes beyond property casualty, and it talks about many various other types of insurance, but generally speaking, how the insurance market is being impacted by the political and economic environment in the world. Now, again, that report also in that article does not point to litigation or public adjusters as the cause or issue leading to the need for this reform in this market, in Florida or any market for that matter. It points to many other things, but not litigation and public adjusters. Okay, growth of usage-based insurance (UBI) is becoming more prevalent, indicating a shift how insurance products are structured and sold. UBI. Targeting profitable consumers. So they're marketing efforts to bring you in to get you to pay them, not about them paying you, okay? So this is focused on what you're paying them as a consumer and not what they're paying you in a claim. Insurers are increasingly focusing on consumers who are less likely to switch carriers and offer more profit potential, okay? Insurers pulling back in certain markets, and in response to unprofitable business, insurers are reducing their presence in some markets. Again, doesn't point to litigation and public adjusters. Decline in claim satisfaction. This is the irony of this. We've talked repeatedly on this show about the Penguin, you had Value Penguin reports and many others that came out about the growing dissatisfaction amongst consumers. And and if you looked at the top 10 reasons that was found in these reports as to the dissatisfaction amongst consumers, the driving force behind that is centered around claims. The dissatisfaction about the timing it's taking, about what is being paid, how it's being paid, and all these various different things. The dissatisfaction amongst consumer is a driving force as to why insurers are having an issue in markets. In fact, when I talked about it on prior episodes personally, I've talked about because of my involvement in the insurtech space is a lack of adoption of tools for consumers. They're not adopting at the rate in which they're adopting tools for the underwriting processes to make them more profitable. They're not doing the same on the consumer side of things, and in any way trying to make your experience as a consumer better. And so there's massive amounts of dissatisfaction among consumers, and quite frankly, I'm of the opinion they're not doing anything to change that. Okay, that's not actually happening. I haven't seen someone come out and be neighborly. Or take care of you hand in hand and do the things that insurance companies, I would say once upon a time may have done. You had local offices, you had a local feel. When you had an issue with insurance, you went into your agent's office in your local market, you sat down and talked about it and went through the process. They got the insurance company on the phone, they worked through these things. If that wasn't sufficient, maybe you'd hire a representative like a public adjuster, or maybe you litigate these things. Now that's far in the past. Okay, this new market in the digital age, it's all about speed, efficiency, and profitability. Okay, on the underwriting and policy side, but not on the claims side. So we see a lot of campaigns by brokers talking about how they have advocates on staff. And I want to make it really clear that your broker does not represent your interest in a claim. In fact, in Florida, they can only represent the interest of an insurance company if they've written authorization to do so. They are licensed to sell you a product. They are licensed to go to market to work with the insurance companies that have given them the right to sell their products through contracts and then sell you a product based on their, let's call it, letter of representation of you, an AR, agent of record, right? So they get kind of like a two-way contract here, right? They have a contract with the insurance company and a deal they brokered there, and then they get a deal that they broker with you, and then they get paid a commission of whatever they sell you. But they only can sell you what they have a contract to sell. So whatever insurance companies have given the right to sell, that's the market they have. Now, different brokers have different insurance companies. Sometimes there's some overlap in that. But in a consolidated market or industry, obviously you have fewer and fewer options, which obviously if you were required to have and carry insurance as an insurance broker or agent, obviously it's going to drive up the cost of things because you have less to pick from. And here we are, and we have less to pick from, and we have a less favorable market, a market that has been ripe with consumer legislation, but yet we finally get to see, we get the curtains get pulled back, the smoke clears a little bit, and we get to see what's really going on here. And these reports, again, are not pointing to litigation issues. They're not pointing to public adjuster issues. They may make mention of claims. Well, of course they're going to, but not in the same light in which these issues have been peddled to the legislators who are changing laws and restricting your access to courts, your access to representation by capping fees and changing marketing tactics and doing all of these things to the consumer advocates, but yet making very little changes on the other side with regards to the insurance companies. And I say that because after Hurricane Ian, there was this scathing report that was published in the Washington Post about rampant fraud that was alleged going on within the insurance companies as it relates to Hurricane Ian claims, where reports were being modified. There's been no outcome of that investigation. There have been several remarks by certain politicians regarding that investigation, but there's been no outcome to it. And here we have these reports that and from most consumer advocates I'm aware of and that I've spoken to and that I've seen online, believe that these reports that are coming out do not point to litigation and public adjusters as the issue. And we have this investigation that's ongoing into certain practices by a very big insurer that was insuring quite a bit of actual property during Hurricane Ian. And where's the outcome of that report? And I'm very interested to know it. I mean, the evidence was pretty clear. The adjuster was able to show his estimate, and then the actual insured showed the estimate they received from the insurance company. So you have the independent adjuster who works on behalf of the insurance company, the eyes and ears in the field, and then you have the report that was actually sent by the insurance company in support of payment, which is they're legally obligated to do. And the two estimates do not line up. There's major changes in there. It's unknown as to why those changes were made, other than the fact that it significantly undervalued the claim, and in fact, in some instances, no payment was made at all. So again, I started this off talking about some recent claims where we have an engineer that seemingly gives an opinion that would lead any normal level-minded lay person to the conclusion that they in fact have hurricane damage, but they insert the phrase in there, wind-driven rain, which has now been perverted to mean something other than hurricane damage, despite the fact that two of the major components in a hurricane is wind and rain, that both cause damage to property. And so, as of course, that has been used and within the context of a policy is give it different meaning, leads to limitations in coverage, if not exclusions. So look for that in your policy. I know we're early here, but we have extreme weather throughout the entire United States. Our Texas office is extraordinarily busy with freeze claims, hail losses. We got tornadoes in Florida. Up and down the East Coast, we're seeing major flooding. We're seeing collapses of roofs and buildings due to the weight of snow. And ice. There's so many things going on right now throughout the country. So pay attention, look at your insurance policy. Obviously, if there's anything that we can do here at GlobalPro, make sure you reach out to us. Check us out online at globalpro.com. And if you haven't already, smash that subscribe button, like us and follow us on all our social media. I mean, heck, call us, 855-487-7475, and immediately get connected with an insurance advocate, someone that's going to look at these things from the perspective of the consumer. You were sold this product, you didn't get an opportunity to change it, modify it, or change it in any sort of way. It is what it is. Get that contract. Let's review it. Let's look at your scenario and let us help you help you find the best path to recovery. That's what we have been doing for over 10 years now, over $1 billion in loss, hundreds of thousands of insureds that we've helped place insurance. We want to continue doing that. So thank you so much for joining us here on the Recovery Report Live. Make sure you tune in, same time, same place, every Thursday, 11 o'clock Eastern Standard Time. Matt, Rob, and many others are going to be joining us here to talk about important insurance, real estate, and business news that you can use. So again, thank you all so much for joining me. All this information will be available for you on our website and all of our social media channels. So again, if you haven't already, make sure you like, subscribe, and follow us, and make sure you get the latest of what's to come. Thank you all again this morning for joining me.